Welcome to the 1099 form instruction course. I'm so glad that you decided to join us today. Just a real little quick bit about me is that I've been an enrolled agent for quite a few years now, but I've been in the tax practice about 25 years. The fun thing is I get to share my knowledge with you, and today one of the things that I know is often needed is more instruction about 1099s, and we think, oh, that's easy. But by the time you get through this, hopefully you'll pick up something new you haven't learned before. This is a 3-part course, keep in mind, so we're going to be going over right now what it is that we're going to cover in this course. In this part 1 of it, we'll be talking a lot more about, when and how and where to file, some of the technicalities. In part 2, we will cover all the details about the 1099 forms and those instructions. And 3, we'll go over some additional information you need to know as well. So in this course, part 1, we're going to be talking about a general overview of 1099 reporting, what the purpose of, why in the world do we have to do this 1099 reporting thing anyway, when to file the 1099s, and there are some, relatively recent change to those due dates, relatively recent being only 1 year ago, and how we file them, where to file, and how you even decide who is it that's supposed to get a 1099. And luckily some exceptions that exist, but then again, we've got to understand those exceptions. So we have a lot that we're going to be covering all in the next little bit under an hour. So stick with us and we'll see what it is that we can have you learn that you didn't know before. So getting right into 1099s and just a general overview of them. First of all, we can say that there is a tremendous amount of misunderstanding of the requirements related to 1099 forms, and especially as they relate to independent contractors. And the past several years, there actually have been a variety of new requirements and legislation put into effect and then removed from effect, which, all this back and forth action continues to contribute to the confusion regarding what those requirements are for individuals, for businesses, for organizations. And that's the problem with it, is it's always changing. By the time that everybody catches up to it, it's changed again. So that's one of the reasons that we've put this information together, is to help assist you in forming a better understanding of what is required. So, and this is again just a quick little summary that we're going to be going over 3 parts, and so that really you have that basis of understanding the building blocks that you can really put all this together and know how to help your clients and how to do this properly. Because we do want to avoid penalties. We want to understand what those instructions are, what the rules and the requirements of creating these 1099 forms are. An additional bonus for everybody too is through my company as well. I work in conjunction with Canopy, but we have offered manuals of this information. If you're wanting to have it in a written format, we have that available on our website as well. So please check that out. And as we get more into this, know that I'm going to be throwing a lot at you in a very quick amount of time, but this way, if you download the slides, you'll have this as a reference, and that's really the reason that I designed it in this manner as well. So some of the technicalities of it, where did all this come from? Why are we going about it, right? If we look at a lot of what we do as accountants, is we have to dive into and deal with Internal Revenue Code. So that you know where the basis of this came from, Code Section 6042 through 6050 were basically what the law is that derives the ability to create these information reporting forms. It imposes these requirements, and it created information reporting. It's the simplest way I can describe it, it's a form of babysitting. So it's to make sure that if you're paying somebody a certain amount, that you're babysitting in essence and telling the IRS about it, so they can make sure they get income reported on a return from that person. Specifically, as we look at IRC section 6041, that generically, we're going to get into some of the very specifics, but generically, if you're paying somebody more than $600 and it's in the course of trade or business, that's the one that requires a 1099 miscellaneous. So that's kind of the one that everybody thinks about when they think of a 1099. Automatically, they're thinking 1099 miscellaneous. They're thinking about most often that independent contractor, if it's more than $600 and if it's in the course of a trade or business. But of course, we're going to get into a lot more specifics so that hopefully it'll be a lot more clear and you can determine when that doesn't apply. If we look at all the changes of all this legislation that's happened, we've seen a lot that's happened over the past few years. If we look at one of our bigger changes, the Patient Protection and Affordable Care Act, nowadays we just refer to it as the Affordable Care Act, was signed to law way back in March 23rd of 2010. It made some really extremely burdensome requirements for 1099 reporting. It was so burdensome that actually the IRS was the one that going, hey, we don't have the staffing, we can't handle this, all the different business advocates were going, no, we can't handle this. This is too. What it was that it was going to require is a 1099 for everything for everybody. So like contractors that were buying materials at Lowe's or Home Depot or all these big places were going, we really don't want to have to give a 1099 to them. Thank you very much. So they actually repealed those requirements in 2011. At the same time in 2010, there was a Small Business Jobs Act. Well, that one, its idea was, well, if we really just increase those penalties by, significant amounts, that's going to force compliance. And that's really the idea behind penalties anyway, is try to force compliance by making it worse and worse for somebody who doesn't comply. So that was the one that really increased the penalties. In 2015, we had a Trade Preferences Extension Act update, which was kind of a non-tax bill, but yet it did impose some differences. And one of them is we had different due dates in the Appropriations Act in 16. All these things affected the way we go about information reporting, either to try to, require more of it, to increase penalties to force compliance, to require earlier due dates, and that actually started just back in 2017, so they get information sooner. And that's really also in an effect of trying to prevent as much fraud because they get information a little quicker on the 1099 miscellaneous and the W-2s, and we'll get into what those requirements are. So as we look at this, we say, this is the trending. So we can see, this is really just leading to the fact that we're going to see more and more legislation. And if we say they're trying to also counteract things like they don't get copies of forms soon enough and they're giving out refunds quicker than they really get to see the information. So we're going to see the trending is for faster reporting. We're going to see trending on more penalties as they're trying to get more and more people into compliance. So that's going to be, if we look at the trending, we're going to see similar things, I can say, in the future is a push for the same things. Alrighty. So if we think, why are we doing this, right? That's sometimes what we think sometimes as accountants, why are we doing this? No. We have to say, what's the purpose? Why would they go about creating information reporting to begin with? And really, if you think of it, it comes down to that they've had concerns for a long time that all income isn't really being reported on everybody's returns. There is a belief that there's an underground economy where business is done entirely in cash and income just doesn't get reported. So therefore, they don't get the right amount of tax. We technically have a voluntary system of income tax compliance, but the Congress and IRS often find it necessary to put in systems that kind of either force compliance or make it a bit easier. So that's why 1099 reporting was created. So if we go back and say, well, okay, what is the tax gap? What is, how does this play into everything? The tax gap itself is the difference between how much is actually paid and what really is technically owed. So kind of going back to that idea of this underground economy, the unreported income, all these amounts of what should be paid versus what really is reported and paid. So because of the massive undertaking this is as well, of just putting this information together for the government, they only do these sometimes about every 10 or even more years. So our most recent one was actually issued as recent as 2016. And that one covered years from 2008 through 2010. So they surveyed a few years and said, okay, here's what we found. Here's the difference. And coincidentally, if we're looking at 2010 is the year where they started enacting lots of changes to 1099s. It'll be really interesting to see, does this tax gap change in future years when they redo this based on, forced compliance. So this happens only, every once in a while. So 10 years previously. The funny thing is from 2006 to 2016, there was not a lot of change in the tax gap. So as we look at what are these numbers? This is how the IRS puts out the chart, and it says, okay, here's kind of the difference between what was underreported, meaning, okay, how much really should have been reported versus what actually finally did get reported. And these are in billions, by the way, very big numbers. And we say, what was the difference of there's non-payers, but there's the underreporting. They should have reported this much, but they didn't report the right amount or the honest amount of income. So as we look at it, it's very big numbers in here. 387 billion is the underreporting tax gap if we just look at kind of a general summary of that. And then they break it out and say, well, some of that's individuals, some is businesses, some is non-business, etc. So breaking this out in a little bit different way, if we say, okay, well, how much are the monies that are coming in? And in this statistical period of time, there were 2.35 trillion that were paid in taxes. Like, oh, that's great. But the tax gap, the difference between what was paid versus what should have been paid, is a pretty significantly big number, 458 billion. The nice thing is they say, well, 81.7, almost a very big majority of the population is in compliance. They're doing what they're supposed to. They're reporting what they're supposed to. But of the total tax gap, that 387 billion we saw on that other screen, we say that represents 84% of the entire amount of the difference is underreporting. So as they look at this, they're going to say, there's so much of this, and it's just coming from, if we said the biggest part of it, 84% of this tax gap, underreporting, meaning what you should have reported versus what you really are. How much was the real number versus what was reported. So if they look at that as such a big chunk of the tax gap, then they're going to try to change that. So they say, well, what changes here? W-2s. Let's look at just W-2s. When the information is reported on a W-2, the compliance rate is 99%. People know that if it shows up on a W-2, the IRS is going to know about it. They're going to be compliant. They're going to report that income. When it's not reported, they find out the compliance rate's only 56%. It's only barely half. So they say, you know what, we need more information reporting because that pushes compliance up higher. I mean, obviously, this is going to be the conclusion that's reached. So the way they go about it is they're going to try to force more compliance, increase penalties. They're going to ask for more forms and ask for them quicker. Coincidentally, that's exactly the legislation we saw over the past few years, is following this trending. So what is the purpose of information reporting? Exactly that, to try to prevent that underreporting, try to prevent that that tax gap in there. They had concerns for a long time that income was being reported, and you can see by that tax gap information, the statistics back it up. It's a very valid concern. If you were running the business of the IRS, if it was a business to run, you would go after the areas that you have the biggest problem, and that's underreporting. So since underreporting, it represents 84% of the total tax gap, and that's everything across the board, the answer is they're going to be more aggressive in that information reporting. They're going to do exactly what we saw, increased penalties. They're going to ask for more reporting and quicker.